Mitesh here. Mitesh is a finance and strategy expert with about 15 years and in startup and angel investment. He began his career with Mandana Industries, which is a limited apparel manufacturing company in 2001. He was heading various projects including the IPO in 2010 and the global licensing with Salman Khan's Being Human, which was in 2011. He joined Ola in 2013, which is one of our leading startup stories that we all know about. And he played a pivotal role in getting Ola to where it is today. He thereafter joined Book My Show in 2016, where he spearheaded finance and the strategic finance in that company, business management. And with this experience of startup world, he has now co-founded IPV in 2018, and he now mentors all the founders across early stage with his smart capital. He is currently focusing on VC and early stage investment, and he is ranked 32 in the angel list by Fortune top 100 angels in India. And so far he has made almost 90 plus investment. So with that, welcome Mitesh. We are so eager to hear you.
Thank you so much. Here? Thanks for that warm intro. But one line in which I didn't understand is that you said he's responsible for where Ola is at today. So I don't know what to make out of it in a good way or bad way. So yeah, but thanks. And then I think it's difficult to succeed speakers like VC Karthik. I love your name, by the way, VC. That's something that we keep practicing every day. And you spoke about being smart, not more than for 10 minutes. Imagine we do it entire day. When we speak with founders or we speak with investors, or you have to pretend that you are smart, and that's when you can raise money for startups. So it's kind of a difficult job. Yeah, but thanks for having me over here, Srini. I think so. Srini is a neighbor in both the ways. He doesn't leave me at home. We stay in the same complex. He doesn't leave me at office. We share the same co-working space. And but truly, I think somebody that I really admire in terms of the way he looks at life, the way he looks at business. We have been friends even beyond business also. I've learned how to breathe literally from him, right? Literally, it's taught me yoga and a lot of other things. So thanks, Rini. Thanks for, first of all, for having me over here. Okay, so I think Inflection Point Venture, it's we set this up, me along with my two other co-founders, set this up around end of 2018. So very simplistic way, we look at investing into startups at early stage, right? And now we have two AIF funds also, where one is an angel AIF with a corpus of about $40 million plus, called First Port Capital. And we have just recently launched our own VC fund also, which is called Physis Capital, which will soon go on air and start deploying by Q4 of 2022. So I think today I'm just going to use the time allotted to me to talk about one of the topics that probably is the buzzword today around entire country, or especially in the startup world, which is funding winter. I don't know how many of you understand what is funding winter? I'll not raise my hand because I don't understand what is funding winter. I don't know, people just keep using this word as a buzzword all throughout. So I'll start with, I think any financial wisdom have to start with Warren Buffett, as is the customary rule. So I'll start with this statement by Warren Buffett. Every decade or so, dark clouds will fill the economic skies, and they'll briefly rain gold. Now, what does this mean? This means today, I think there is a lot of nervousness around how people look at investments in general, be it public markets, be it startup world. And startup world, though, is the favorite child of everybody to kind of, get their, vent their anger on. That I don't know how these guys get valued and how these guys, kind of raise so much money. And I think they deserve this because, the way they've raised money and the way they've spent money, I think this is the time where it has to come to a logical end. And a couple of things that, even VC spoke in his speech. I don't know, you mentioned something like profitability. I didn't understand that word as startup. Right, so I'll not bore you with this data. I think all of us probably in this room are smart enough to know how the overall digital ecosystem in India have grown, thanks to Geo and the likes of others. But the number of internet users, the data consumption, the number of smartphones in the country, right? And overall how India has become a destination for good capital inflow, that has really been instrumental in driving the startup story as well. So I personally joined I joined CFO of Ola in 2013 and made my first angel investment in 2015. Right, so I've been angel investing for 7 years, but trust me, I think when I joined in 2013, startup ecosystem used to be only about Flipkart, Snapdeal, and Ola. There were some smaller startups and all, but hardly there was any understanding about seed round and runway and Series A, Series B. So I think the way ecosystem has developed in last 5 years, to be precise, it's just amazing. I think it's the best time to be a founder right now. If you have a good idea, if you have the courage to kind of start on your own, I think the ecosystem is there to support you with capital and a lot of other things. Right? Again, I think some of these charts, but the way 2021 probably was the best year that the ecosystem has ever seen. The amount of funding rounds that we have seen around, the number of unicorns, that have been converted in the country. I think one data point says that till 2021 we had about 40 odd unicorn, and in 2021 alone itself we created another 40 unicorns, right? And that was the strength of the capital flow that we saw during the year, which created these unicorns. And I think India currently ranks number third in the unicorn race and all. But more than unicorn, what gives me courage or what gives me confidence about the overall ecosystem is the way early stage ecosystem is also developing. Like I just said, in terms of not only the financial help, but also in terms of mentoring, in terms of the number of incubators, accelerators, right, who are helping the young founders and the startups at the young age. That speaks a lot about it, right? So I think this one data point at the bottom where Flipkart became unicorn in 6 years, likes of Swiggy, CoinDCX, Rivigo, BharatPay become unicorn in 4 years, Apna and Cred became unicorn in 3 years, and finally we had Mensa, which actually become unicorn in 6 months, right? Now I'm not hinting that businesses are getting stronger and stronger, but this just speaks about how, startup ecosystem has been attracting some good capital flow. Right. Again, I just spoke about how 2021 has been about. You see all these, the bar diagram, and suddenly you see a large green diagram in 2021, which speaks about the number of capital flowing into the ecosystem. Right, but I think what has changed now in 2022, right? If you see the inflow, especially since March onwards, like something happened post March, and suddenly now in last 3 months we are all talking about funding winter and how funding for startups have been drying down, how funds have become more cautious, how everybody is now talking about, instead of a GMV multiple, from a GMV multiple, now it has come down to a revenue multiple, and from revenue multiple now it's going to a profit multiple, right? Where startups are also expected to kind of at least create some profit or show paths to profit and conserve cash flow and all. So I think the number of deals that have been happening, in terms of the funding and all, has been on the decline. We have been talking about a lot of layoffs as well. We have been reading in the newspapers, we have been seeing in the news that how some of these startups, some of the large ones, have been laying off, and without naming, one of the large unicorn, how, things are stuck where audit is not done, and a lot of other stuff around those. So there are some sort of negative signals or some sort of skepticism which was always around the corner for this sort of growth. But I think, in the euphoria of funding, it kind of got lost somewhere. And in 2022, now it's getting resurfaced. So there are talks about a very, very strong headwinds, and that's what we call funding winter, where it's becoming difficult for startups to raise funding as compared to last year. But does the funding winter really exist? That's something that I'm going to kind of throw light on. There are multiple factors causing this slowdown, which is slowdown in global markets. As we all know, how the mature markets like US and others have been behaving now. Tech stocks have taken a royal beating over there. In India itself, the current listings that we have seen of the large players, there have been a massive discount to the price at which they were offered. Now, this is all a function of, is it higher valuation? Is it untenable valuation, I should say, or is it the downturn, economic downturn? That's anybody guess, but I think multiple factors, geopolitical tensions also, we all know about Russia-Ukraine situation, rising global interest rate, inflation, and bearish public markets. Right. But I think what we always preach to our investors as well, today at IPV, we have 7,000 plus investors on our platform, of which about 1,000 plus are part of the Angel AIF also, and as we launch the fund, there also some good marquee HNIs, NRIs, and global funds and all. typically we always advise that I think today is the best time to invest. Now, it sounds contradictory, but when in the bear markets, I'm talking about investing more. But if you see the overall history, how some of the large unicorns or some of the large entities have been created during the slowdown. So these are some of the examples. So economic downturn of 1970s, which was between 1973 to 75, Microsoft was founded. Apple was founded in 1975 again. The dot-com crash of 2000 to 2002, which was again a worst period by public imagination or by statisticians, right? But entities like SpaceX, Google, Baidu, MySQL and all, they raised good amount of funding or their Series A and all during these time, and where they are today, we all know, right? And the great financial crisis of 2007, 2008. Now look at the names, those were actually born during this crisis period. Airbnb, Zynga, WhatsApp, Asana, Square, Evernote, Uber, Business Insider, Dropbox, Slack, and there are many more. I've just chosen some of the few examples. Point is, I think as an investor, today it gives an opportunity to have a proper discussion with the founder where I'm not worried about his valuation ask. 2021, every founder will come with 2 term sheet and saying that I'm pre-product, pre-revenue, but I've got a term sheet of 20 million. Now either you take it or I walk away, right? And that was the situation. The market is now turning into an investor market. For us as angel investor, this is the opportunity to identify some really great founding teams, some really great businesses who are coming in at normal valuation, which are coming in at a valuation which are explainable, which are probably something that we can take bets on. And that's why, you know, any sort of such sort of calamity, as we call, is always a good time for us as investor to look at, right? So again, I'll not go into this slide, but some of the points are investment opportunity in great startups at decent valuation, which I just spoke about. Late stage startups will be willing to raise survival and growth capital from angels. How many late stage startups right now we see coming on for again angel funding, coming on for funding from micro VCs, angel investment groups. Now this is growth and survival capital. A lot of them have probably filed DRHP or going for listing or thinking of going for listing, but obviously markets are not supportive right now where they'll have to push their plans. Now this is an opportunity for investors like us to actually look at and invest into some of them. I will not say we need to invest in all of them. Again, valuation is something which is a very subjective criterion, and we need to kind of assess it from startup to startup. But at the same time, I think this is a great opportunity where at least angel investors like us who are cutting small size checks will be able to even consider investing into some of these great stories. Resilient startups, matrix focused VC investment, focus to shift from growth to profitability. Founders to use cash more efficiently. I think this is one of the change which is the best development that have happened. I think people have started valuing cash, respect cash more. Till last year, and I'm not kidding, I think VCs were pushing founders saying that, okay, you're not burning enough. I think you're not dynamic enough. So the dynamism, the definition of dynamism was how much of cash burn that you are able to drive and how much growth you are able to buy against that. So this was like a paid marketing. Everybody used to run after customer acquisition. Now, one fundamental question which nobody was asking is that how are you able to retain your customer? It's very easy for me to spend money, give discount and acquire a customer, but the same customer will only come back and my cohorts will be stronger when I'm able to provide a good quality product or a good quality service. Now, these are the basic fundamental rule which actually we as VCs were also responsible for not driving it because it was a crazy market and everybody just wanted to get into that euphoria and make the most of it. Weeding out subpar startups and founders from the market. So good startups are still able to raise funds. A good thing about this development is that this is good for some good quality startups. How? Because good quality startups are still able to raise funds. We see some of these quality startups are still able to drive their Series A, Series B, Series C also, while late stage investment has generally become difficult. Market for hiring good people is also kind of coming to a sanity. Gone are the days when techies were offered a bike and a tour to Dubai for World Cup when they were to join a company, right? Now this is a more realistic market where you're able to hire some good talent because market is coming to an equilibrium and ultimately with this layoffs also, I think it's some sort of a balance which is now prevailing. And that's helping some of these good quality startup. Consolidation is happening. Otherwise, it was becoming a capital war. When in a sector, if there are 7 or 8 players are getting funding from VCs and all, then it becomes like a capital play where everybody will try to throw in more and more capital and win over the customer or win over the market share. But one thing that I have learned in my career is that money can help you fix problem. It can never help you solve problem, right? So while it is still okay to kind of start with a business where it's not immediately about monetization, you don't focus on profitably right from day one. But at least there has to be a path to profitability. And these are the businesses that we love at IPV, where the founder is aware that, I'm not making money right now or I'm not looking at revenue right now. I'll consolidate, but at some point in time, right, my bank account should have more customer money than investor money, right? It's that smell of customer money which is the most important thing than investor money. Unfortunately, founders take funding not as a milestone in a journey, but founders take funding as the success itself, right? It's not about valuation, it's about value creation, and that's something which is the fundamental rule. Cool. Now this slide, I'm sure you must all be reading in again Economic Times and other papers and media. But even during this crisis, when we are speaking about funding winter, look at the amount of capital some of the large VCs are sitting on, right? And this is what we define as dry powder or gunpowder. Now, these VCs have already raised this money from their LPs, which is waiting to be deployed. What I'm trying to tell is that it's not that this capital is available for free, but for good businesses and good founders, money will still be available, is available even today, right? It's just that valuation will become more tenable. Some difficult questions will be asked if you're a founder and if you're out there to raise funds. The due diligence processes will be a little longer, unlike last time where you can get 3 term sheets in a month. But capital definitely is available. So some of these bigger names, A91 Partners, Chirate, Sequoia, HealthCord, Waterbridge, Trifecta, even debt, there are so many venture debt funds that have emerged, right? So when we are talking about VC, venture capital is not only equity. We are talking about venture debt as well, where for your working capital needs, you don't need to dilute equity. You can have a venture debt also. And I'm really pleased the way the debt ecosystem is also developing, where there are innovative debt structures also. It's not only the plain, simple, vanilla term loan or working capital. You have now RBF. What is RBF? Revenue-based financing companies, which are also emerging, which are helping some of the early stage platforms as well. Right. So I think this is more like, is it a crunch or correction? I think international VC is also launching India focused funds. So India still remain to be a priority market for a lot of these international VCs also. There is slowdown in Southeast Asia as well. There is slowdown in China as well, a bigger one than us. There is definitely some nervousness in US as well. And India as an economy right now, with the dollar rate also, I think it's now becoming like an attractive destination for a lot of foreign funds also to deploy money over here and get the startups at some amazing mouth-watering valuations. So in terms of overall economy indicators, all the metrics are going in the right direction. As a country, I don't know, I don't think anybody will have any question about the fundamental of the economy. Now, when we are talking about investments or startup ecosystem, it cannot be completely deviated or be aloof from the overall economic condition. And that's where I think some of the major macroeconomic indicators, of course, apart from inflation, still continue to kind of trend well. And in general, our sense is that probably this so-called funding winter or so-called nervousness in the market should be a good opportunity for next 6 to 9 months till up to, let's say, next March or about 12 months, while things will be correct and things will be back to probably normalcy. But this is the time to kind of make the most of it, as Warren Buffett again says that be greedy when everybody else is fearful, and be fearful when everybody else is greedy, right? So I think this is the time to be greedy in good sense of words rather than being fearful. Cool. So I think we have also seen similar sort of scenarios at IPV. Out of 23 startups that we invested between Jan to September 2020, which is the COVID period, as we all know, 50% of the startups have given exits or partial exits at an average IRR of 135%. So these are the real numbers that we have been able to deliver. And 13% of the startups have gone through up rounds at an average IRR of 124%. And you'll know some of these names like Fable, which is a large name in health tech ecosystem, Videoverse, which was earlier called Torch, it's into AI, BlueSmart, cab operator, Samosa Party, OTP. So some of these well-known names have been born or we have invested into them during the crunch time of COVID itself. Great. Finally, so stay young. Learning never stops. That is the thing that keeps me driving. Also, I think it's the fun and it's that energy of meeting young founders, understanding from them the way they look at business. I mean, I always say this. I'm a CA of 2001 batch, and when I joined Ola in 2013, I think there is a lot of unlearning that we all need to do first. There are so many other concepts that are deep deep rooted in our mind that we need to change that and understand every day the world teaches something new. These founders, these young founders, whether we fund them or not, that's a different thing. But there is so much to learn from every person that you meet, and that kind of keeps me going in this VC world. So we don't stop playing because we grow old. We grow old because we stop playing. I think that's the mantra that we leave with. Thank you all. Thank you so much.